Well, good Monday, everybody. Welcome to our Trading with Technical Indicators. I'm Connie Hill. I'm subbing in for James Boyd here today. How many of you struggle with making a decision when you're looking at the chart? Do you have an entry or don't you? You're kind of like, yeah, well, maybe. And maybe you fight with yourself because you're seeing so much information on the chart. Well, today I'm going to teach you a system that could kind of get rid of that problem for you because there's only going to be one signal to get in and one signal to get out. And everything else just disappears. Okay, you're not even going to use it. So we'll get into the details of that in just a bit. Now, I am joined in the chat by Rachel Dashiell. Dashiell. Did I say your name right, Rachel? She can't hear me, or I can't hear her, but I hope I said her name right. She is the newest member of our coaching team here, and we're happy to have her aboard. She is well qualified to be here. You guys are going to learn a lot from her when she starts teaching. In any case, she's here to help me filter questions. So if I'll keep an eye on the chat, if I see a question, I'll try to pick it up. If there's something I missed, she'll try to help me out, answer your question for me. All right. Now, I hope you're following us on X. I'm Connie Hill CS. I've done a lot of posting here this morning. Rachel is Rachel Dashiell CS, and we'll post educational content, things we notice out in the charts that we think you might be interested in. We're going to post some information about that. So it's free and easy to do, so join us. Let's go through our disclosures and we'll get down to business. What we talk about today is intended for education and informational purposes only. Don't consider it a recommendation. Options carry a high level of risk and are not suitable for all investors. Short options can be assigned at any time up to the expiration, regardless of the in-the-money amount. An in-the-money option has a higher risk of being assigned early. This is one difference in the paper money account than in your live account. Paper money does not mimic that functionality, but we will be using paper money here today. It's a great educational tool. Recommend using it, especially as you test out different systems, including the one that we're going to talk about here today. Past performance is no guarantee of future results. Investing involves risk, including the loss of principal. Now, I've got to say hello to some of you friendlies out here. Appreciate you joining week after week, day after day. We've got Paul, Luke, Gary, Wade, Grace, Oda, Thea, Joe, Ron, Will, Jay Richardson, and a whole bunch of you guys. Welcome each and every one of you. As far as our class today, I want to talk a little bit about moving averages. And you're going to go, moving averages is pretty basic, Connie. You know, I used moving averages. That was one of the first tools I learned in terms of using a technical indicator to help me learn. And if that's the case, then you should be pretty comfortable with it. All right. A moving average just really shows us, you know, what's happened in the last number of days with the price. Has it been 100 days ago? Has it been 50 days ago? What is that average price? Now, they can be a good indicator to help us with the trend. All right. And we're going to use it here today. Now, I'm going to pop over here to my Thinkorswim. And we're going to bring up our, this should be the SPX there. And I have on my chart some moving averages that you might have on your chart. Now, I know when James teaches this class and his other classes, if I were to ask him what two moving averages does he like the best, you probably could spit it out. What is it? What is the favorite moving averages that James likes to use? If you want, you can chat that in as well. I'm going to answer it as we go ahead here. He likes the whole moving averages, right? The 10 and the 20. And then the MACD, this is one of the studies that he likes to use. All right, but they aren't the only ones that you could use. If you're looking at some shorter time frames, you might look at a 5, a 10, 20 period moving average. Okay, those might be the most common. All right, you guys know it. You're telling me absolutely it's the 10 and 30 whole moving averages. I know, we know it, don't we? But if you're looking for, say, something shorter term in that particular system, yeah, the whole 5-day moving average, right? You could use that. Now, if you're somebody you're like, I'm not an active trader in a lot of my stuff. Some of my stuff I look at long term, then you might be more interested in looking at a 200-day moving average or a 100-day moving average is if you're looking at the overall trend of the stock over a longer period of time. Now, there are different types of moving averages, as you know, and we are going to build something here today. Real quickly, we are going to get rid of this. Well, yeah, we'll just get rid of these two studies, and we're going to add onto the screen, we're going to add on a simple moving average. We're going to put on an exponential moving average exponential. Oops, I got that twice. And then we're going to put on a whole moving average. Oh my goodness, how many holds do I have? We'll just go with the basic one here. Now, what I want to show you is how different these look from each other. Okay, the default period here is 9, but I'm going to change it on each of these to be 20. And so on our simple moving average, it's a basic 20. Let's keep it blue. The exponential moving average, we're going to make it a 20. And we're going to make it green. And then the whole moving average, let's go ahead and look at it. It has some good colors already assigned to it. Let's make it a 3. All right, those are the only moving averages we're going to have on the screen at this moment. And let's look at the difference. Okay, now this is just 6 months that I have up here, but let's just kind of drill in so we can see a little bit more detail. Okay, the exponential moving average is the green one. Okay, the 20 exponential moving average, it wiggles a little bit. It's a little bit more responsive to those last previous 20 days of price that we're looking at. The simple moving average is this light blue one down here. This one's the whole moving average that has the blue and the pink, and I probably should have changed the color here. Let me just change the color here on the simple one. Instead of blue, let's make it like purple, okay, so that it's a totally different color. Okay, we can kind of see that a little bit better. Which of these moving averages is more reactive to the change of price? Does that stand out to you? Which of these three moving averages, the simple, the exponential, or the whole moving average? Yeah, it turns out that this whole moving average, we can see up here, definitely reacts to changes in price a lot more quickly than the other moving averages. And so in some of your classes or some of your strategies that you like to trade, yeah, maybe using a little bit quicker time frame could be helpful to you. Yeah, you guys are right. That's absolutely the whole. Yeah. You need to know what color Rachel's hair is. I believe I would call her hair brown. You'll see pretty soon because she'll be teaching some classes here. All right. Yeah. Now let's move on to another concept. I told you I wanted to teach you a system that you could have just one rule to get in, one rule to get out. Okay. And it is going to be called a moving average crossover system. Okay. Let's talk a little bit about it. It could be something that you use a simple moving average on, an exponential moving average on, or a whole moving average on. You could use any one of those. Okay. Now, what we are going to use here, and I'll bring this study up here so you can see, we have a moving average crossover that is also going to give us a little bit of an indicator on it. And what this is going to do is it's going to put a green arrow on the screen when the 5 crosses the 20 in a simple moving average. Again, you could change this. Okay, they could be exponential, weighted, Wilder, whole. You can change the moving average in here. For simplicity purposes here today, we're just going to keep it at a simple moving average, okay? And I've got it set up on that crossover. So I have a 5 that's a separate study. Just bring it up here, simple moving average, put in a 5, put in a 20, and then you grab this little study that's a moving average crossover. So it'll tell you when the 5 crosses the 20 in case you're just not sure. All right. Most of us can probably tell when it's there. Now let's take a look at one stock here, probably a stock you've heard of before, NVIDIA. And I'm gonna zoom into just this period of time. Now today it does have a green arrow on it, right smack there. Oh, come on, little circles. Yeah, right here, currently, I don't know why that's not functioning for me, but follow my mouse, okay? There's a green arrow on today because that slower moving average, the 5, is crossing above the 20. And so some traders might take that for a bullish entry. Well, when was the last time it gave us that particular signal? Coming back here, I'm going to have to move this a little bit. That came on here. And this came on as the moving average crossed here. You can see a little green arrow. Not sure why my little tools don't want to work, but here is the green arrow right here. If somebody were trading this system and they got in on the 5 crossing the 20 here, how long would they have been in the trade? Well, they would have been in the trade from April 28th, boom, to boom, to boom, to boom. Let's advance here a little bit because it trended really nicely. Until when? Probably this day right here. Could have been this day. You'll have to look at the numbers, but we'll say for sure right here it crossed over, and that would have been your exit signal. You're not looking at resistance. You're not looking at support. You're not trying to see if there's any price patterns in there. Not trying to see, oh, where could my target be after the crossover? None of that, okay? We are just creating here and going to follow a very simple system. So one rule to get in is 5 crossing 20. One rule to get out is 5 crossing 20 going down. So that 5-day starts headed down and crosses over the 20. Now, I want to take you back a little bit further in time here. And maybe I'll use this oval. Maybe this one will work for me. I want to highlight the other times recently that it had a green arrow. Right here it had one. Okay, the 5 crossed above the 20. Did it stay? It really didn't. Look at that. It went above it and crossed, but then immediately came and crossed back down a couple days later. So a little bit of a whipsaw there. I want to go back just a little bit further here. Let's go to just say 9 months here. Knowing that that's what the history looked like might have taken some nerve, right? For somebody to say, okay, I'm going to get in on the crossover, but ooh, this is kind of scary because they're headed down, down, down. When was the previous arrow before that? Well, let's just kind of zoom in here and see. It was here back in February, where the blue crossed above the 20, the green. That would have given an entry signal here, and it didn't last so long. And here's a period of time. We get the green arrow right there, where the blue crossed above, 5 crosses above the 20. It didn't last very long, okay? So you might be thinking, well, Connie, this is stupid. Why are you showing us something that maybe doesn't work? Okay, and the answer to that is it can work, but you might want to have some additional rules with it. What might those additional rules be? Because I told you just one rule to get in and one rule to get out. You might want to identify the trend, and you might say, well, I want to make sure one of those moving averages is going up, right? Versus both of them headed down. Could that be an additional filter? Yes. Does that complicate the system and make you have to think of one other thing and add judgment? Yes. And so you could just still go back to, if it crosses over, I'm going to get in. If it crosses down below, I'm going to get out. Let's see. Patik says the SMA, EMA, is it 9 days or 20 days now? I thought I set all of these to 20 days. Do I have one of these that is wrong? Here's my 5. Right here. Here is my 20. And then actually this study in the middle, I don't know why it got in the middle. Maybe I moved it. Is showing us the arrow. Okay, so this is the one you say, okay, what moving averages do I want to see? And then it'll produce that green arrow so you can see it on the screen when it actually occurs. Okay, so 5 and 20, even though 9 is the the default that comes in on those moving averages always. All right. Now, do you suppose in this case, well, we're going to go ahead, we're going to trust the signal. One of the moving averages is moving up. Okay, the 5 is. But in any case, it's simply the signal we're going to take. Now, I want you to think now, trading this, if we know our exit rule is going to be the 5 crossing down below the 20, do you think it might be useful for option trades, spread trades, calendar trades? Okay, it might not be a good strategy or it might not be a good system to use for those kind of strategies, because maybe you want to make your entries and exits based on something totally different than just a crossover. Okay. So you might have to be a little careful here. If you were a trader, you might just say, well, I'm just going to buy the stock outright. And so actually for us today, we are going to buy the stock outright. We're just going to buy 50 shares of NVIDIA, and we're going to automate the exit. Okay, we're going to automate it that if the 5 crosses down below the 20, that it gets us out of the trade. Now, let's backtrack here. I said we're going to do 50 shares. We don't really know when it would cross. We don't know what the price would be. So how do you position size when you don't know what your risk is? Well, I think you'd have to do a little bit of estimating. Okay, you're going to have to say, well, I'm not going to put in maybe you don't put in a hard stop, but you need to say, well, today or tomorrow or the next day, if the price of the stock maybe went down to, let's just say 173. It's at 177 right now. Maybe at 173, maybe it might cross down again, but we don't know. We could use that amount of risk, whatever the price of the stock is now, 177.28, less 172, and say, okay, to position size for risk on this trade, let's do that. So 177, let's go 26 minus 172, and I'm just kind of eyeballing it, okay? Would say we have risk on this trade of about 526. Well, depending on how much you're allowing yourself to risk in your account, then you can position size. If I go to the calculator here and say on any trade in this particular account, we can risk up to $1,500. So let's divide that by 526. And this is going to say don't buy more than 285. Let's see, maybe let's try to, I don't think 285 shares, I mean, maybe it is, but we'll also have a limit on our account. We won't put more than, it's a $150,000 account. We don't want to put more than 10% into any single trade, and sometimes we'll only do half of that. We might only do 5%. So in that case, we're willing to spend of our 150,000 times, oops, let me get my mouse in there, 150,000 times, let's just go 0.05. We don't want to spend more than $7,500. Okay, so let's just go $7,500 and 7,500, not 1,000, and divide it by the current price of the stock. And we were going 26 here. 42. We would not want to buy more than 42 shares. So I was a little bit too high on that. Okay. Let's see. Just checking what your questions are here. I think, thank you, Rachel, for picking up those questions. Chuck says you could add a MACD for a moment. Oh, add a MACD for momentum, I think is what you're saying there. You could, but that would be a different system than what we're looking at today. We're just doing moving averages. Okay, so we are willing to do 42 shares here. So we'll change my 50 to 42. And then let's put on a stop loss. How many of you would like to be able to say, well, can we make this automated, that we can have the system get us out if it crosses over? And the answer is yes, we can. So we're going to do a first triggers sequential. So after this first order gets filled, then the next order can be in play. And so we'll create an opposite order here. It's going to act as our stop loss, but we're going to give it conditions to do so. So we're not going to call it a stop. We're going to call it a market. We're going to make it good till canceled, and then we're going to put these conditions on it. Now, the interface has, sometimes the interface on Thinkorswim changes, it modifies a little bit. So this might be a little bit different than maybe what I may have shown you in the past. Okay, so what we're going to look at here is we're going to say if NVIDIA, usually we'll pick mark there. If the mark price is whatever and goes greater than or less than, in this case, we're going to choose study, and then we're going to choose edit. Okay, so study, edit. Don't choose simple moving average. That's going to tempt you. You're going to think, oh, we're using moving averages. Don't choose it. Okay, choose edit. And then kind of the default that comes in here is the simple moving average. We're going to hit edit again. And then we're going to be able to put in a crossover here. So we're going to say we want simple moving average. We want it to be a 5 initially here. And we want to say crosses below what? We're going to put on our study. We're going to choose a simple moving average again. I'm just typing that in. So we're going to say based on the closing price, so it wouldn't do it intraday, based on the closing price of the 5, if it crosses below the what moving average? 20, then we want to get out. Now, if you wanted to, and you could add this to your system to automate it, we have the within however many bars, and however many bars is the trading day, right? So if you just said, yeah, I want it to be for closing whatever day, just one day, that would be our 1 bar. If you wanted to say 2 bars, 2 trading days, you could, but we're going to just keep it as simple as we can here. Okay, we're just going to do the 1 trading day. We're going to hit save. We can see our little formula up here. We're going to say okay, and we can kind of scroll down here, make sure it looks right. That NVIDIA, the simple moving average of 5, crosses below the simple moving average of 20. If that condition is true, then we want to get out. And then it's going to show in a waiting condition when our working orders, waiting till that condition exists. All right. Any questions on that? We're going to go ahead and send it in. What if you're an option trader and you're like, well, I really just like to trade options. All right, good. We bought our stock. You could, if you wanted, you could do maybe a longer dated option like a leap that you might substitute for the stock. An option is not a stock, right? It doesn't have all the privileges, the ownership of owning the stock. But if somebody said, you know, I kind of want to do that, we might go pick something later dated. It doesn't have to be a leap. It doesn't have to expire in January. But maybe we went out here to say maybe like almost a month or a year away, say June 18th. Say we came out to June 18th. There's lots of people trading option contracts out that far. Look at the thousands that we have out there of open interest here. If you wanted, you could buy a call option. If you wanted to buy it maybe a little bit deeper in the money, making sure that maybe it has at least a 60 delta, you know, you could substitute buying a longer dated option in the place of buying that stock. All right. Just checking here. So Susie and Lincoln say, what system is being used? It's just something we're discussing today. It's the 5 moving average crossing, the 5 simple moving average crossing above the 20 to give us an entry signal. And then to get out, just the exact opposite. The 5 crossing down below the 20. The 5 is this blue, the green is my 20. Okay, let's look at this for some more. How does one automate this? That's what I just showed you, Deepak. I just showed you how you could get out on the exit piece. I haven't fiddled with it to see how I could get in on the entry piece, to be honest with you. I've done some scans to help me find ones that are crossing over today, but I haven't necessarily automated that entry piece. Okay. Not the analysis we're using, but the software system. Oh, Susie wants to know, this is our Thinkorswim. This is the paper money platform that we use. This happens to be my demo account. So it kind of looks like and feels like a real account, but it's not a real money account in it. Okay, but we use it that way. Okay, should we do another example here? I think we should. Let's take a look at CVX. No, not CVX. Yeah, CVX. Let's look, just kind of zoom in here for a minute to see, yep, we've got a green arrow right here today. And we can see that blue, the 5 crossing over the 20. We can see that pretty easily here. There's a nice big distance between those two moving averages. And so it's not guaranteed that it's going to close there, right? We always know things can change as the day marches on and new data comes in and whatever. It's not guaranteed to close there, but you guys, we're not going to be sitting together at the end of the day to see if it really closes there. Okay, but if you wanted to say, oh, I'm going to wait till it closes, you could. One thing about this right now is you look at it and you go, well, both of those moving averages have been moving up. That's kind of helpful to know. But there were also periods of time here when it gave a green arrow when the moving averages weren't really going up. Okay, so the one that I think is the most obvious here is this one. Okay, what had been going on before the crossover? Well, it had rallied up a little bit. In fact, it had a green arrow right there. And this one gave a nice little run for a bit and didn't cross down until maybe about here on this red candle. Okay, so it had, did you give some back? Yeah, you gave some back from the peak if somebody had been trading that system here. Okay. Okay. Let's go ahead and let's repeat the process so you can see this again on another stock. Okay, so we're going to do it on CVX. Again, we're going to automate it. Show you how that process works again. We're not using anything else. Am I looking to see if there's a price pattern it's breaking out of, if it's the flag that it's breaking out of, if it's close to support or it's close to resistance? No, we are not looking at any of that. Now, I'm a technical analysis person. I love the technical, so does Rachel. We're both CMTs, which means we've studied Chartered Market Technician designation. You study technical indicators. But we're kind of saying we're wiping all of those other things out just to make it as simple as possible. Okay, so we've got to estimate for position sizing, you know, how much risk do we want to take in this trade? Well, you're going to have to, again, use your discretion to determine, well, what would the price maybe be if it were to cross over soon? Okay. And so, you know, maybe you look at this and you go, well, maybe the moving averages would cross over themselves if the stock got below maybe say 155. That green line's about 155 and some change, so maybe a little lower than that. Maybe they might be crossing over them, but we don't know. But we have to assume some sort of risk here. We could also go back to the idea that we say, okay, I'm willing to put in $7,500 into any position, and how many shares could I buy there? Okay, if you wanted to kind of approach it that way. If we have $7,500 and we divide that by how much risk? I should have started with that number. Let's do that number first. So let's give it 155 as where maybe we'd put a theoretical mental stop. We'll call it a mental stop, not a theoretical stop. 157.75 gives us risk of about 275 on the trade. We put in 275, we're probably buying more shares then we want to, so we'll position size it here. So $1,500 divided by 275 says we could buy 545 shares. Well, if we really bought 545 shares at $657, would be spending a lot more than that 7,500. So that's why I'm saying let's just go 7,500, divide that by the risk, or rather the current price of the stock, 157.78, 47 shares. So we'll just do 47 shares on this one. Okay, does that make sense? We really don't know when it would cross. It's an arbitrary number to determine risk, but we do have to position size. You don't want to just go in there blindly and go, oh, 100 shares. Might not be appropriate for your account size. So we're going to select on that. We're going to get into our 47 shares. And we'll do an exit order here as well. So first trigger sequential, create an opposite order. Okay, and this is the part you might want to take some detailed notes on. Okay. We're going to make this our stop, but it has to be set up as a market order so we can put in the condition. Okay, so we're going to do a market order, make it good till canceled, click on the gear to get our conditions. And then we're going to say, all right, if CVX, we're not going to base it on price, we're going to base it on study. Come down to edit this again. And then we're going to say, all right, the simple moving average of what? The 5 crosses below, select a condition, and we're going to say study. We're going to go look up simple moving average, SIMP. And again, remember, you could use whole, you could use exponential, you could use different time frames. You don't have to use 520. That's just what we're using as our example here today. And then we're going to make this one a 20. And we're just going to say today. And notice it's based on the close. Okay, so shouldn't trigger if it happens first thing in the day. All right, it's going to be based on the close. Oh, let's hit save. There we go. Now we can hit OK. Can I save that order template and use it again? Ooh, I don't know. I have not tried that. We could experiment and see if it would save it as a template. Okay, I haven't tried this out, so I don't know for sure, Pathik, if we can do this. But when you want to save a custom template, usually it is in relationships to strike prices and using different triggers to get in and out. So we'll see if it works. I'm just going to hit this, and it's going to give a description of some sort. We might not be able to tell exactly what that might be. OTO change 147. I'm just going to put on here, I'm going to put 520 SMA. That's what we're going to call the template name on the exit. And we'll see if it lets us pull it up. We'll try it. In any case, we'll hit save. I have no idea if that'll work. We want to create it manually usually before you create a template. So we'll just go ahead, we'll submit this. And so I'm going to go back out here. Just wanted to make sure the price is still similar enough. It looks like it is. It's been changing. Okay, got filled on that. And again, something you might want to do is check it every day to see if it crosses, so you know if you should be expecting to get out. Do you have to put in an exit order that way? No. Could you be somebody that says, I'd be more comfortable checking it at the end of every day and just seeing if a crossover occurred? Yeah, you absolutely could do that. Okay. Chris says, I think close usually work like last in these conditional orders, but you could be wrong about that. That's why it says close. And again, I haven't not spied, but I haven't seen it take place before my very eyes. Okay, so I can't either agree or disagree with you, Chris. because I haven't done that. Okay. All right, let's do this. Couple of things. I really hope all of you have subscribed to the Trader Talks channel. I really hope you have. If not, do so. Just go to the bottom right corner of your screen, click on that little blue YouTube icon, and then it makes it so much easier to find our content. For example, what's going to come up after our class today? Well, trading covered calls and short puts. Great. Maybe those are strategies that you're wanting to get into. Later today, I'll be trading ETFs. That comes on at 4 Eastern time. And it's one of the 2 classes that you've got to be there live because we do not post the recordings. Okay. It has to do with FINRA regulations. I know some of you are so unhappy about that, and we wish we could post it. We would love to. It's just not feasible. Okay. So if you're interested in ETFs, hit that. But we also have some different things we're doing right now, some bite-sized content. Oh, what did James put on here? The last one Ben did yesterday. Not yesterday, last week, but looks like Ben and Cameron put on a couple of bite-sized content videos. And so these are like less than 10 minutes. You can see here, James was 7 minutes and 51 seconds, and Cameron was 5:57. So sometimes you might have the attention span and the time to go, yeah, let me just look at a couple of videos, learn some cool technique or some cool something that you can fit into your day. So it's helpful if you've got all of that there. All right. Let's pop on back here. One last thing that some of you might ask, and so let's do this, and that is, how can you find a 5 crossing a 20? I think it's possible. Well, yeah, it is. I've got a simple scan here. This is not it. Oh, let's hit reset, clear everything out there. And it's really quite simple. I'm going to load it up and then we'll go through it here. And look at this 520 bullish crossover scan. Oh, look, I've got it twice. I think I like this one a little bit better. I can't remember the difference. But basically, I say, okay, the last price of the stock has to be at least $10. And then it's going to give you 2 study parameters here. One is because we're going to put in average volume. And then the other is looking for the crossover. Remember, these study filters do not work in your paper account. Okay, they work just on your live account. So you might have to create the screen on your live side. If this is something you want to practice in your paper account, create it on your live side. We'll probably not get a ton of results here. Okay, and maybe you just jot them down and then go over to your paper site and test them. Okay, it's not like this is going to generate a big old watch list for you. It's probably going to be a really small group here. So we're going to look for the 5 simple moving average. And again, could you change it? Yes, you could change it. Simple, exponential, whole, whatever you want. Crosses above the 20 simple moving average, again, based on the close of the price, it is going to come back as if it's triggered right now, if it's already crossed over. And then in here, we have 250,000 as average volume. Your threshold might be higher. You might say, well, I only like to look at stocks that trade $1 million. That's okay. You could use that if you wanted to, okay? Whatever you want. I don't think we're going to get 50 results back, but we'll do that. And then I was having it sorted by something actually that's a script. Now, this is showing that maybe we already have quite a few. That's interesting. NVIDIA's here at the top. I actually like to sort it by volume quite a bit. But let's look at some we didn't look at. We'll just take, oh, there's our CVX right there. Let's look at SMR. SMR. Looks like it's getting a crossover right now. 5 crossing above the 20. You don't have to take it, you can use discretion if you want. It simply was to show you simple rules, getting in, getting out, and based on a crossover and nothing more and nothing less. Okay, hope it's been helpful to you today. Appreciate your input, your considerations. I will share that scan with you. It's not a hard scan to create, but let me share that with you. Well, that's not the right one. Let's go here. There we go. Share scan query. Anytime we share something with you, remember it's not guaranteed as to accuracy or timing. All right. But I will throw that out in the chat. And if you just take that URL, come up to setup, open shared item, plop in the URL. If you want, you can just use that amount of the URL starting after the front slash and that start with that exclamation point. You can do that. Just do it a preview, import. I don't need it on there twice, so I'm not going to bring it in. All right. Very good. So yeah, coming up next, covered calls and short puts. That's what we saw out on the calendars up next. So we're going to have a little break in our programming right at the top of the hour. I think Mike Fairborn's going to be leading that discussion. So we would love to see you back there, or I'd love to see you this afternoon. Rachel, thank you so much for answering questions. They kept you pretty dang busy here today. I did not see a survey, so you're off the hook for the survey. But if you found this helpful today, hit the thumbs up. On the way out, remember, if you're not a subscriber yet, get on over, click that button, and it just helps you find our content a lot easier. And Rachel and I would love to have you follow us on X. All right, you guys, we'll see you in just a little bit with our new class at the top of the hour. Bye-bye.